Hello and welcome to Your Stocks live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Thoria and let's take a look at what the markets are doing. Well, the markets are subdued, lackluster, rather muted. It's absolutely quiet as far as the frontline indices are concerned. The Nifty for now is trading close to the 25,450 mark. The sensex too quite subdued in today's trading session. Let's take a look at what the broader end of the market is doing then. The mid-cap index as well as the small-cap index continues to reel under pressure today, underperforming the frontline indices. As far as specific sectors are concerned, it's a mixed screen, but mostly all of the sectors are in the red, being led by Nifty Media, which is down almost 1.2%. Nazara Tech is taking a hit today, down almost 3.5%. Z Limited too, down almost 2% in trade today. But on the flip side, on the back of some Q1 updates, we do have the FMCG pack in focus. Godrej Consumer continues to gain momentum in trade today. For now, it is up almost 6.5%. Dabur as well in focus on the back of its Q1 update. They're seeing sequential recovery in demand. That stock also doing quite well, up almost 3.3%. Hindustan Unilever, Imamiya, some other names that are doing quite well. Some jewelry stocks also in focus today on the back of Q1 updates. Senco Gold continues to surge higher. On the flip side, when we look at Kalyan Jewellers, that stock is taking a knock in today's trading session. Some rub-off effect on the back of some good Q1 updates on PC Jewellers as well, because that stock continues to surge higher in trade today. For now, PC Jewellers is also trading with a good gain of almost 16.5%. But it's a good time to welcome in our guest now. We're being joined by Ashish Kyal of Wave Strategy Advisors and Gaurang Shah of Geojit Financials. Good afternoon to you, gentlemen. This is Vamakshi joining in. And let me first start off with Ashish then. What's the technical view on the markets? Because so far it's been an absolute quiet and range-bound session.
Afternoon to you and all the viewers, and also to Gaurangji. The overall market trend, I think it's just a pause right now, and everyone is waiting for the big news that has to come from the US. But having said that, as far as the chart is concerned, I think this is consolidation. Nifty has shown a very smart move from 24,500 levels onwards, and it went towards 25,500, and it's now consolidating there. So that's a good sign. It's relieving the overbought zone, and right now it's forming a flag kind of a pattern with a resumption should happen on the upside. The upside, I would rather buy the dips over here because the overall undertone still remains bullish for the targets of 25,800. And on the downside, this immediate support comes to around 25,300.
Well, thanks for that, Ashish. And let's get started with some of the stock queries then. Raman Jain writes to us from New Delhi. He holds 550 shares of ITC at rupees 160 and he wants to know whether to hold or sell at current levels. Gaurang, what would be your fundamental view on ITC?
Thanks so much, Vamakshi, for having me on the show. Good afternoon to you, to everyone, to my good friend Ashish Kyal as well. So, the FMCG pack has been a little bit underperforming given the kind of headwinds that they had in terms of higher crude oil prices, higher input cost, low volume growth, demand from semi-urban and rural India. But all that is likely to change in the next 3 to 6 months, given the good monsoon and, of course, spendable capacity of an individual. Diversified company ITC recently hived off its hotels company and listed it as a separate entity. We have a buy and a hold from a long-term point of view from our research team. And let me give a disclosure first. All the recommendations are a part of our fundamental research team. Our company, Geojit, or I do not have any personal investments or any monetary gains. There is no conflict of interest, but we give similar recommendations on similar lines to our clients. They might hold their investment interest in this. So ITC is a buy and a hold from a long-term point of view. And I think the earnings could be a major turnaround this financial year.
Sure. Thanks for that, Gaurang. So buy and hold from a long-term perspective for ITC. But Ashish, what's your technical view on this counter?
Technically, also, I agree with the view. The overall undertone for ITC remains bullish. We can expect the stock to move towards the level of 440 over near term. And on the downside, the immediate support comes to around 410 levels. It has been drifting lower, but there is a positive divergence we can see on the indicators that shows that the overall undertone is still positive and there is a positive divergence, which means the downside momentum has reduced. So we can expect it to move towards 440 and maintain 410 as a stop loss.
So thumbs up from Ashish as well as Gaurang on ITC. But let's take the second query of the day then. So Shashidhar is on the line from Bengaluru with an investment query. He wants to invest in Tejas Networks for the long term. Shashidhar, please go ahead with your query.
Thanks. Hello all. So I'm Shashidhar from Bangalore. So first of all, thanks CNBC for helping youth to achieve financial freedom. And I'm currently looking for a long-term opportunity in Tejas Network, which is backed by a Tata Group. The stock almost corrected 50% from its peak and looking attractive now. I know the reason behind is no Q4 negative result. This was first quarterly loss in 5 quarters, and also the order book concern. So, given the strong parentage and the long-term potential, so I'm looking to buy this stock at the current price and the level. So I wanted to know if I start accumulating or buy at this level.
Sure. Gaurang, your view on Tejas Networks?
So I think it's good to hear investor doing their own work, Amakshi. And this is what we always recommend. You should do a little bit of homework before taking a plunge into or deciding into investing to a particular sector or a stock from a long-term point of view. So our team has a hold stroke who can accumulate as Mr. Shashidhar is looking to accumulate the stock at lower levels. The platform and services that Tejas Network provides is going to be of very crucial importance. Again, if the time horizon is long term, by definition, 12 months, 18 months, 24 months, then first of all, hold on. If you're looking at buying into it, don't put all your money at one time. Start at current levels, and then on lower levels, in a phased out manner, you can definitely accumulate the stock from a long term point of view.
Sure. So accumulate from a long-term perspective for Tejas Networks. But Ashish, what are the charts indicating for this one?
From looking at the charts perspective, Tejas Network currently quoting at around 701 levels. The stock has underperformed given that it broke below that 850 and now consolidating in a very narrow range. I think it's forming a triangle kind of a pattern, and we are yet to see a breakout which is awaited. So if it manages to move above 730, that would be a first sign of a positive breakout. So my suggestion would be can be bought, but let's wait for 730 to be taken out to get a positive confirmation. And on the downside, the important support for the stock is around 680 levels. So above 730, you can buy it and then hold for a target of around 900 levels on the upside.
Sure, thanks for that, Ashish. But moving on then, we now have Nitya, who is writing to us from Hyderabad. She holds 214 shares of Bajaj Housing Finance at 70 rupees. She wants to know whether she should book profits or continue to hold that. Gaurang, I think you don't cover the stock, but let me come across to Ashish then. What's your view on this counter?
If you're looking at Bajaj Housing Finance, we can clearly see that the overall space and the sector has outperformed. We can clearly see that the financial stocks has continued to do well. Bajaj Housing Finance anyways has shown some kind of consolidation, and I think there is a possibility that the stock can also move on the upside from here on. We are seeing some kind of pressure over short term, but if the stock manages to move back about that 123 mark, there is a possibility the target of 130 can open up. On the downside, one can maintain a stop loss of around 117 levels.
Sure, and let's move on to the next stock then. Tony Cherian writes to us from New Delhi. He holds 35 shares of HPL Engineering at 567 rupees. He wants to know whether to hold or book his profits and buy another stock. Ashish, this is for you again.
If he's talking about HPL Electric and Power, I'm not sure if that's the stock which is quoting at around 564 rupees. If that's the stock, then he can continue to hold on to the stock. And if the other stock that I can see is the HBL Engineering, and HBL Engineering currently quoting at 636. Overall, the undertone for the stock is positive for HBL Engineering, and we can expect the stock to move towards the level of 700. It's forming a higher low pattern post forming a low near 400 levels in the month of April, and the undertone is bullish. So 700 is the target. Hold on over here. And on the downside, price action support comes to around 618 levels.
Sure. So 700 target for HBL Engineering. That is the stock that the viewer was referring to. But we also have another query from Gurbinder Singh Bedi. He is writing to us from Noida. He holds 200 shares of Bharti Airtel at rupees 1,173 and 840 shares of Reliance at 1,048 rupees. He is a long-term investor and wants to know whether to hold or sell these stocks. Gaurang, what's your view on Bharti Airtel as well as Reliance?
Well, so unless you are in need of money, honestly, I don't think you should exit the investment. especially when you invested in large caps like Reliance Industries and Bharti Airtel. Bharti Airtel, incidentally, is one of the large cap stock which has recently made a new all-time high. Second largest dominant player in cellular service sector. Our viewers and the verbatim given out is that the ARPUs are likely to hit somewhere close to about 300 and maybe more as we go into the future. Voice has been contributing, large contribution coming in from data. We have a buy and a hold from a long-term point of view on Bharti Airtel. Reliance Industries, again, a diversified company now, has been on our buy list for a very, very long period of time as I can recollect. So unless you are in need of money, hold on to it on both.
So buy for Bharti Airtel as well as Reliance Industries from Gaurang. But Ashish, chartically speaking, how are both of these counters placed?
It's positive. Bharti Airtel, we can clearly see it gave a very strong breakout from 1880 levels, reached towards 2040, just consolidating there. So there is no sign of reversal that we can see here. The undertone remains bullish. And if you look at the overall daily chart, the stock has also managed to be closing above the prior day low. It has not closed below the prior day low yet. So the tone is positive. We can expect the upside targets of around 2100 over near term. And on the downside, the support for the stock is around 1990 levels. As far as Reliance is concerned, if you look at where is Nifty right now, major contribution has come from Reliance Industries. That one stock has managed to lift the prices to the higher levels. And even today, the stock is managing to do very well, up by more than 1%. So the overall undertone for Reliance is bullish. We can expect the stock to reach towards a level of around 1600. And on the downside, maintain a stop loss of around 1510 for the stock.
So green flag from both Ashish as well as Gaurang for Bharti Airtel as well as Reliance Industries. But let's slip into a very short break. But before we do that, remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C and Global Lens at 8:30 p.m. Welcome back. Thanks for staying tuned into your stocks. We still have with us Ashish Kyal of Wave Strategy Advisors and Gaurang Shah of Geojit Financial Services. Let's first look at one query from Balasubramaniam, who's writing to us from Bengaluru. He currently holds 150 shares of Power Grid at 281.88 rupees. Since the last 1 year, the return has been very low, he says, and he wants to know whether he should exit and invest in some defense stock, or should he wait for another 3 to 4 months? Let me first go across to Gaurang for this. Gaurang?
Well, so we have a whole recommendation on Power Grid. And, one has to understand the nature of a sector when one gets invested. Now, when you got invested in a sector or a company like Power Grid, which is into transmission and distribution network, you need to give sufficient time for your investments to start making decent profits. It's one of the monopoly play, if you will, in terms of transmission and distribution of grid networks, enabling power transmission and distribution. If I'm not mistaken, almost about 70% plus is the grid network that Power Grid holds. The number of or the capacity of new power generation that is likely to come up in the next 3 to 5 years, you will need services and facilities and infrastructure provided by Power Grid. So I would recommend a hold. Give it some more time and give it a little bit of more patience for it to give you a fruitful return from a long-term point of view.
And Ashish, what about you? What's your view on Power Grid? And do you think that this particular viewer should hold on or exit his position?
Overall Power Grid showed a very good move from 250 levels to 320 by April 2025. And since then, it has been just drifting lower. I think it has retraced nearly 61.8% of that and should bounce back from there. So this looks like possibly wave to completion. We should see a third wave on the upside in Power Grid. Overall undertone remains positive, but my suggestion would be, instead of looking at only 3-4 months time horizon, extend the time horizon to at least a year And we can expect the stock to reach towards the level of 340 or 350 on the upside. So the overall tone remains positive. Stay invested in the stock. On the downside, the crucial support for the stock is going to be around 280 levels.
So stay invested in the stock. That's the view coming in from Ashish Kyal. But moving on then, we now have Matthew VC, who is writing to us from Kerala. He holds 100 shares of APL Apollo Tubes at 1,915 rupees and 50 shares of Alchem Labs at 5,040 rupees. He wants to know whether to book losses or continue to hold or add more in both of these counters. Gaurang, I know you don't have coverage on Alchem Labs, but what's your view on APL Apollo Tubes?
Well, so we have a buy and a hold recommendation on APL Apollo Tubes. Again, uh, patience is something that you need to have in stock markets. You can't be impatient with your investments in case if it is in a strong fundamental company and the visibility of growth looks quite positive in terms of the management commentary. So I would say, first of all, hold on to Apollo Tubes to your investment, either at these levels or if my good friend Ashish has some lower levels, you can definitely add on to the stock from a long-term point of view, in case if Ashish has a similar view that I have. On Alchem, like you said, we don't have a coverage, so no comments on that.
Sure, and Ashish, so Gaurang says that it's hold from a long-term perspective, and what would be the levels that one would look at if they want to enter Alchem Labs as well as Apollo Tubes?
So if you look at APL Apollo, the overall tone from the weekly charts, if you look at it, that has been bullish. Definitely, the stock showed a very strong run up from the levels of 1300, made a high of 1900, and we are seeing some kind of a retracement of that. And that's a very healthy sign. When you see an impulse rise and then a retracement on the downside, that's a positive sign. So over here, continue to hold on, can add more at these levels also, because there is a very important gap area between 1675 and 1720 levels, and stock is very near to that. So add more to these levels. We can expect the stock to move towards 1950 or 2000 again on the upside. And on the downside, the support for the stock is going to be around 1650. As far as Alchem Lab is concerned, the stock has underperformed drastically. Honestly, the stock moved down from 5,370, made a low of 4,750, and still there is no sign of recovery. I would suggest to be out from Alchem Labs, invest in something like Apollo Hospital, that is showing a very strong performance, an impulsive rise, possibly the third wave, and that would be a better choice. So be out from Alchem Labs and invest into Apollo Hospital.
All right, so out from Alchem Labs, invest in APL Apollo Tubes. Let's also take another query from K. Padma. She's writing to us from Andhra Pradesh. She holds 200 shares of Granules India at 150 rupees and wants to know the prospects of the investments that she's made. Now, Gaurang, the stock has not done much, especially if we look at the charts on a year-to-date basis. It's down almost 18%. So what's the fundamental view on this counter?
So I think each and every sector company goes through a cyclical period in terms of earnings because of certain headwinds from a short to medium term point of view. Earnings might not look all that encouraging, but from a long term point of view, we have a positive stance on Granules India. We have an accumulate stance. Again, I believe her investment is at a much lower level. So I don't think she should be impatient. Give it some more time, and I think earnings should improve.
Sure. And Ashish, what is your view on this counter, Granules India?
See, Granules India has a support at around 475. As long as the stock manages to sustain above that support over short term, there is a possibility we can again start seeing some kind of a positive traction. Right now, it's consolidating, forming a triangle pattern. We can expect it to reach towards 525, provided it manages to close above that 500 level. So overall undertone remains positive as of now, with 475 as a stop loss and 525, 530 as the target over near term.
Sure, and now let's also take a look at Mayank's query. He's writing to us from New Delhi. He holds 100 shares of Indian Hotels at 300 rupees. He asks if he can buy more shares at this point. Gaurang, what do you think of this stock?
Well, I think the entire hospitality sector is going to set for a major turnaround, to be very honest. If you just reflect upon the commentary given by the management of hospitality sector of any company, whether it is Indian Hotels or Taj GVK or a Lemon Tree, etc., they have huge lineup in terms of new additions of rooms capacity, including opening up of new assets at various places. tourism sector is likely it has already witnessed a major turnaround and likely to see much more positivities as we go forward. On Indian hotels, from a long-term point of view, this is the only stock that features in our coverage in the hospitality sector. We have an accumulator positive coverage on Indian hotels. Room tariffs are likely to go up by another 15%. That is what the verbatim was. Along with that, you have contribution coming in from banquets. You have leisure travels, you have travel related to medical reasons, you have travel coming in from overseas, and along with that, you have business travel. So, and of course, the rates have gone up to a great extent in the last 6 to 8 months, 12 months, if you actually go to see. So, hold is the stance, accumulate is the stance on Indian hotels.
Absolutely. So, bullish from a hotel perspective that the tariffs are going up, but not so much from a customer point of view. So, thank you so much, gentlemen, for joining in with your views as on the fundamentals as well as the technicals. Thank you so much, Gaurang, as well as Ashish. But that's all we have on this edition of Your Stocks. But do remember to email us your queries and we will address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.